OpenAI distancing itself now from Robinhood's latest push into crypto after the trading platform started offering what they're calling tokenized shares of SpaceX, which, of course, is a private company, to users, though the users, and I should say, are only in Europe. So this is not available to customers of Robinhood here in the United States. In a post on X, though, OpenAI saying the following. It says, these OpenAI tokens are not OpenAI equity. We did not partner with Robinhood. We're not involved in this. We do not endorse this. Told users, please be careful. Now, in response to OpenAI's post, a Robinhood spokesperson saying, quote, these tokens give retail investors indirect exposure to private markets, opening up access, are enabled by Robinhood's ownership stake in a special purpose vehicle. We'll explain how this works in a moment. Robinhood stock hitting a new high on Monday when it made that new token and blockchain announcement. U.S. users, as we mentioned, cannot access these tokens because of regulatory restrictions. We talked to Paul Atkins, the new chair of the SEC, a little bit about this token issue. And so what's really happening, and you can speak to it probably even better than I can, is there's private companies, SpaceX, OpenAI, what have you. Those are not available. Those shares are technically not available to the public because they're private. They don't have the same disclosure as a public company. What a whole number of companies are doing, including Robinhood, is effectively trying to create almost like a derivative of the underlying asset. Mm-hmm. They own the underlying asset through oftentimes a special purpose vehicle or some other kind of mechanism. And they're saying we're going to basically break that special purpose vehicle up and then we're going to into pieces, but not really because we're going to keep it. We're going to create sort of derivative pieces that track. It's almost like a tracking stock of that. And OpenAI is saying this is not our thing. The other piece, so there's two pieces to this that I'm very curious about. I don't know what you think. One is, clearly these are private companies that shouldn't be in the public. This is a mechanism to get around the law. And by the way, only happening in Europe through Robinhood. Others are doing it in the United States, by the way. So they're just going straight at it and saying they're going to even do it here. And the question is, should they be allowed to do that? The other question is, the OpenAIs and SpaceXs of the world, in some cases, don't even want these guys to have the shares, meaning they don't want Robinhood to own the shares. They don't want anybody owning these shares. They don't actually want a liquid market because typically the way these kind of shares work, they come usually from employees, honestly. And they don't want usually you have to sell it back to the company. Mm-hmm. Like they get the first look. Right. They don't want the employees. They want the employees to have some liquidity, but not too much liquidity. Right. Because the truth is, if all the employees are able to sell today, it changes the whole culture. This goes back to Sam Altman saying, you know, if Mark Zuckerberg's paying everybody $100 million, it's going to create a culture of mercenaries. So they don't want everybody to become bajillionaires yet.
I think that there are a lot of different issues and potential problems with this whole notion of tokenizing security. I mean, I think for individuals, I think the marketing of this product is going to be very telling because you do not own. And I don't think people understand that you don't actually own the shares because they think that they're owning tokens which represent shares. They represent them the way an option represents a stock. You don't actually own the stock. You own an option. I mean, it is a derivative. It is not the underlying asset.
You might as well be on FanDuel.
Yeah. Betting on the direction of
the value.
The valuation.
That's what it is.
Basically.
It's a bet. So the question is whether you think, I mean, we just talked to Paul Atkins. I don't think that he is prepared to regulate this market in a meaningful way. I think what he would like to do is try to make being a public company more attractive so that he can sort of edge out and make it less attractive or so there's no need for this kind of thing. But he doesn't seem to be saying this over here is no good and we're going to stop it.
It sounds like he's reluctant to say that yet. But I think that, I mean, maybe we're putting words in his mouth, but there are disclosure issues, right? There's a reason why retail investors don't have access to this. Right. There's a reason why these companies are private. They have less disclosure, and retail investors need to have that disclosure. Right. Fidelity might have more access.
Here's the thing that I don't know about. All of these things are pitched as democratizing investing. And by the way, we would like to democratize investing. I think you want more people.
That's what we are all about, right?
I'm not disputing that. And so then the question becomes, people who are watching are saying, Melissa, Andrew, I want access to this stuff, and I can't get access to it currently. Why are you trying to stop me from having the same opportunity that Mark Andreessen and Peter Thiel have. And that is part of this issue. And we haven't really grappled with that from a policy perspective.
Then you could make the argument the entire other way. That is, investors should have access to anything they want.
Well, and
without guardrails.
Correct.
And there's still
I'm not arguing that.
Fraud laws, anti-fraud laws to protect you. I mean,
all I'm suggesting is there are people out there who say, look, you're not protecting me, you're protecting the man. I get that argument.
Right.
More to come.